So hello again, everyone, and welcome to the next of our webcasts. They are part of our series in our roadmap to recovery as we chart our way through this pandemic. And today I'm delighted to be joined by Henry Wells, who is the Managing Director of M&A at Duff Phelps. So we're going to be talking a little bit today around buying and selling businesses in travel, I guess. But I mean, my first question is, has it all completely dried up? Does a crisis of this magnitude just put everybody off from selling and buying, Henry?
Morning, Lucy, and thanks very much for inviting me on. Really pleased to be here. Yeah, has it all dried up? Not completely, but quite a lot. So let's look at sort of some M&A volumes more generally, and then I'll bring it down into travel. So in Q2 19 versus 20, so the 3 months of April, May and June this year versus the same 3 months last year, for M&A deals across Europe for businesses under £200 million, M&A volumes are down about 2/3, so it's about a third of the volume. When we bring that to travel, in Q2 there were only 4 deals, and that's been the lowest quarter on record. So even if you go back to the 2008-9 global financial crisis, the lowest number of travel deals in Europe then was 7 in one quarter. And then when you actually look at the quarter that's just been, 2 of those deals are pretty traditional M&A deals, one of which was the investment in Rompot, which is a Dutch business, which sort of shows investment in local and national travel there. But the other 2 were not traditional M&A deals. So to all intents and purposes, yes. But does that mean we're all sitting here sort of doing nothing? I think no. We've got a number of opportunistic funds and buyers who are saying, well, actually, if the world's gone to hell in a handcart, this is my moment. And then we've got a number of buyers who are sitting there going with strong balance sheets. I wanted to buy this sort of business pre-COVID. I still want to buy it post-COVID. So I'm just going to have to think a bit differently as to how I structure it and how I pay for it. But those deals will still be going ahead.
Okay, so I guess that was my question, was if you were, because presumably you would have been working on some deals before this all hit. We're not going to ask you any names, but for those people, do you just literally say, we're going to put everything on ice? Or, I mean, I guess in some cases, if people wanting to acquire, the prices and the terms could actually be better at the end of this, maybe.
Maybe. So let's go back to some dark day in February of this year. Seems a decade ago. Yeah. I had 5 travel deals on, 2 in the UK, 2 in America, and 1 in South America. They were all what I usually do, which is selling high growth businesses for sort of high multiples. And yeah, they all went on pause almost within a week. And effectively, we said to our clients, look, you cannot answer the question now that a buyer wants to know, which is how are you going to perform over the next 12 months? And so we did put them on pause, and they will go on sort of medium and long-term pause on depending on each situation. So yeah, and so what do you say to those people? You say sit tight and do what you have to do. You've still got a good business, and it will come back. But in the meantime, I've been advising people, on what they do to survive and get through what is, effectively a trauma. And when we compare it to, one of the things I often get asked is this the worst crisis ever, and is it like any other crisis? And I'm not that old, but I was around in 2000 and I was around in 2008, and those crises were both very different because businesses in the travel space all of a sudden went from not only no revenue, they went to negative revenue with a negative working capital model. That's cash out, and that is unprecedented.
Yeah, absolutely. So interesting then that you said that you're obviously not doing nothing. You're helping businesses still, and so you said you're helping them to survive, which is not your normal role. So what kind of things are you doing? Just as cash is king, I guess that's the most important thing. And you were talking earlier about people having a strong balance sheet. So has that been the focus?
I think there's 2 things I'm really doing. One is helping businesses that need capital, and one I'm helping businesses that have capital. So the businesses that need capital, they are running all sorts, as is every business, and rightly so, running all sorts of scenarios as to what is going to happen over the next 12 months probably. And many businesses that I'm advising, I'm saying you need a downside scenario that says that no one travels, or there's no travel, and so therefore revenue, bookable revenue till April of next year. And most of them are going, well, I'll have April and January, and then a more upside case is that there is some of the summer back on. And so those that need capital, they either need debt or they need equity, or they need their equity restructuring or their debt restructuring. And so we are helping with that. And I'm also fortunate in that I have a large number of colleagues in Duff Phelps who specialise in things like HMRC, C-bills, CLE bills, moratoriums, cash preservation, the whole lot. And so I can bring them in and get them to help. For those businesses that do have capital, we are sitting there going, right, this is what you wanted before. Let's see if we can work out how we get it now. And I think a seller of a business now is someone who is probably looking for a new partner or is looking for a way out. And if they're looking for a new partner, we're sitting there with our buyer hat going on, right, how do we structure something that allows what was a good business and will be a good business, but is going through a traumatic time, to structure something that says, well, I want to share in the upside, I want to share in the future, because come 21, 22, we're going to be back doing just what we were before. And I think that I've heard a lot of people talk about, is travel dead? Will people ever travel again? It will come back, and I think it will come back stronger, because I think the industry will have had to have pivoted slightly. And so therefore, 21, I think, will be a very difficult year, because we are looking at the ramifications and what's happened with 20, with rebooking. Where are people going? There is going to be a resurgence in which country, when, how bad. But then, I think then 22, I think I'm hopeful that we have what is a much more normal year, and people innately want to travel. And you look at the stats, we said how many people traveled in 1980 and how many people traveled in 2020. Then they're not going to want to sit at home. They want experiences, and I buy that completely.
So, I mean, you're talking to people all the time. I mean, are they a little bit more positive in the last couple of weeks or so? And particularly, I guess, since we had the announcement from the government about their safe list of destinations. I mean, are people, is it real doom and gloom, and people are worried about losing their businesses, and they just, as you say, want to get out and sell out? Or do you think people are feeling a little bit better?
Yeah, I think I'm very lucky and I'm privileged. People talk to me and they tell me what's going on, the good things, the bad things, and they tell me because they trust me that I won't tell anyone else. So like a doctor-patient relationship, I store all this data, and then I think how I'm going to use it to help others. And I have a few people that are at the bookends. So I have a couple of CEOs that are the most doom and gloom people, and I have some of the very sunny uplands. And when I talk to them, I then taper anything in between and go, right, where are we sitting? I think that the government announcement that's just been with travel and the lifting of various sanctions is a bit of a false dawn, because people are still very unsure, but they are booking. And so what we are seeing is a rise in bookings for especially September and October. So we're seeing positivity there. And also what we're seeing, of course, is the wave of rebookings, where people originally were given some sort of a credit note in March, and that 3 months is coming to an end. So will people rebook, or will they demand their cash back? I think it's still quite mixed.
Yeah, that's quite key. So of the people then that have got capital that you're talking to, is it, I don't know whether you can say this, but is it largely trade buyers, or is it private equity? Because sometimes private equity get a bit nervous about our sector. I know when it's good, it's very good for PE, but they do sometimes get nervous. So what kind of people would be looking to get into travel, or to acquire in travel?
Yeah, so I think it does fall into two buckets. So with the trade, you have got trade with strong balance sheets that want to exit or execute some sort of strategy. They wanted to do that pre-COVID. They still want to do that. So we're working with them as to how to how to best execute. And that is not about trying to get it for the cheapest. It's about trying to get it for the best value, and that value is about engaging with and incentivizing the ownership or the management team of the target to work with that business going forward. I think with private equity, so more generally, I mean, private equity invest in a variety of businesses. In 2019, there was 110 billion of what's called dry powder, which is money that was raised in that year but not invested. And so that means that 110 billion. I mean, this is across all sorts of private equity, venture capital, startup, needs to be invested. And so they need to find a home. And I think with travel, I think it will take a bit of a pause as people assess what the real impact is. And I think people are in private equity assessing very carefully which of the sort of sectors and subsectors will do well and which will struggle, which will need to change, and which they will back. But I do predict that they will definitely be back with a vengeance. It might not be now, but it will be certainly over the next year or so. I also think that some of those funds that have been raised by what's called opportunistic funds, and they are there to look at to help out businesses who are in distress, whatever sector, and travel is certainly one which is attractive to them. You make the right investment now, and a business comes back very quickly. High growth, high cash generation, low asset base could be very attractive.
Yeah, I mean, there's been a couple of companies, or should I say, well-known individuals who were senior executives in the travel sector who've sort of set up little businesses that are all about, helping businesses that might be struggling. So they've obviously got some cash together or some investment somewhere, and they're looking to try and, I guess, swoop when there might be people in distress. I think that's what I'm taking from that. So do you think we'll see more of that?
I think a variety of people have set up, and some have set up saying we're here to help, and we want to help you, and we'll get paid, either in equity or in cash. Equally, we can help you find money because we've been around the block and we know what the pinch points and the issues are. I think there will be a lot of that. And look, if you were a private individual and you'd run your travel business for 10 years, you were nicely profitable, maybe you took a nice dividend every year, and you sit there now and you go, do I want to bet the house, or do I want to find someone that's going to help me? And actually, that's a pretty lonely place. And so people like that, people like myself who are connected with finance or with others, it's a good place to talk to.
Yeah, so there could be some new buyers, not just the sort of ones that we would perhaps have known of before. There could be some new people interested. I'm interested to know, though, what changes with a deal in a time of crisis. I mean, we've talked before, Henry, because you've been very supportive of our M&A session every year at Travel Weekly that we do, and always you talk about how management team is very important, and obviously the vision and the plan and all that. So does that change? Do the fundamentals stay the same in a time of crisis, or do different things come to the fore in terms of doing a deal?
I think a lot stays the same, and there are a few other differences. So I think what stays the same is management. And actually, what I'm hearing from people and CEOs in this crisis is firstly, it sounds a bit flippant, but don't waste a crisis. There are a lot of people that are restructuring their business. They're perhaps doing stuff that they were thinking about doing, didn't quite want to do, but now they have to do it. And secondly, what they're finding is that their second layer team are either really stepping up and going, I'm here to make a difference, or some are struggling with it. And so it's really finding the quality people. So that remains the same. I think what's different is a higher level of diligence, because people are going to want to ask the question of the unknown, which is, well, what does this business look like next week, next month, next year? And so I think that is extra, and so things take longer. I think what's also different is that there is a value pricing scale of which which is, when combined with risk's high now because we don't know what's going on. So how do you price that in? How do you value that over maybe now, 1 year, 2 years time? So those are the sorts of things that we're really focusing on.
And do you, if you were doing a deal today, let's say, Henry, would you structure that deal differently now? Like I don't know how it works, but would you have it over a number of years and certain, goals that have got to be reached, and have much more sort of conditional elements in there?
Maybe. I mean, I think if I were in doing something now, as I would in any other situation. So this is exactly the same, which is asking my client, what do they want and what do they want to achieve, and then it's trying to execute that with a target, or with them being sold themselves. So yeah, it might be that we structure slightly differently. We will see, I'm sure, conditional consideration. We will see earnouts used much more. We will see innovative ways to share in the upside. And then also in terms of the downside, we've got a lot more scenario planning. A number of businesses now that were EBITDA positive are currently burning cash, and that cash burn may get greater because as the furlough scheme comes off, and travel doesn't happen. That could be one scenario. Or the other scenario is that the furlough scheme comes off, they reorganize their labour, and actually travel comes back, so they become more profitable. So I think there's quite a number of scenarios of which you could go, and so that sort of diligence is really key.
Yeah, I mean, we had Chris Foti on one of these sessions. We
Yeah, I
talked
saw
about
him. Yeah, very
the
interesting.
trust model, and one of the things he talked about lots of different sort of outcomes and things, but I mean, a lot of people have been talking about putting customer money into a trust model, and he was saying that one of the impacts of that is that if they've got to put money into a trust fund, they'll have less working capital to do M&A. I mean, there's a question whether they should have been using customer money to do M&A anyway, but but his prediction was there might be, I guess, if you were a trade buyer, you would have less money available to be acquisitive. I wonder what you think of that.
Well, I think on depending what sort of a model you have, and whether you're sort of agent, operator, bed bank, online, whichever. But the trust model has significant number of benefits, and I think if you look at some of the online travel agents now, some of whom have the trust model and some of whom don't, I think we'll see it'll be interesting to see how the customer views that, and I think those that have it will make a virtue of it.
Yeah. And do you think that will be a factor in people's interest for a company if they've, because of the problems that we've obviously seen over the last 3 or 4 months with the refund situation and the huge delays on some of those? Do you think if a company has a trust fund model, that would be more attractive?
It may be. I think if that trust fund model turns into increased customer confidence, which then turns into increased sort of booking and rebooking, I think that would be a positive. Clearly, a trust fund model is less attractive from a working capital and funding perspective, so that might be less attractive. So I think there will be ups and downs, and I think it's hard to make a generalisation, and equally dangerous to do so. But I think that when we move forward 3 or 4 years, we're going to look back and we're going to go, how did the industry react at the time, and what has the industry done since? And I think there will be the requirement for some changes, because it's clear that it could have handled it better. Some people have handled it very well, and I think others less so.
Yeah, absolutely. Now, it's interesting that you do remain optimistic. That's great. You said just earlier that you think the sector travel will come back, and it will come back stronger ultimately. But presumably for a while at least, it might be smaller, because we're inevitably going to see some companies not make it through, and they might either just fall by the wayside, or perhaps they will be picked up. There may be consolidation. So do you think that's likely to be quite a significant number, or do you think that now that they've got through 4 months or so, do you think that they're likely to be able to survive to 2021?
Yeah, I'm optimistic for the sector. I think where if there are businesses that are in stress, I think it's going to get harder before it gets easier. And I think the reason for that is because you have you've got a number of costs which the government are funding at the moment. I think roll forward 6 or 12 months, you've probably got businesses where landlords, banks, insurers, regulators are being nice to them at the minute. They might be less nice to them in 12 months' time. And I think that there will be increased demand, I think, from customers, but I think the supply side will drop, and I think we will see companies that were in stress. I think they'll find the next 6 months harder than the last 6 months.
Yeah. Well, of course, we already saw the failure of Shearings,
Yep.
although a couple of weeks later picked up by Ledger. So, I mean, it's not like we've not seen any deals. There's been a deal, hasn't there? There's been quite a high profile one saving a very big brand and a well-known and a legacy brand in travel.
Yep.
So I guess that was good news. We don't know what was paid for that deal. We don't know any of the details of it, but that was good news, I guess.
I think, I think Ledger in picking up the brand showed the brand value. I think it was, I think it's very sad when people in the industry lose their jobs and businesses go bust. But I think we're going to see more of it, and I think equally we will see people and businesses picking up the good bits of businesses if businesses do go under.
Yeah. Well, it looks like you might be quite busy then for the next few months or so. I'm sure you've been, as you say, you've not been idle there at home, but it sounds like there could be, some movement in the industry more than just the sort of the 4 deals that you're talking about.
And I know these are statistics and damn lies and statistics, but I think that what I think generally we will see is an increase in activity over the next 6 to 12 months, and a lot of that will be distressed or opportunistic. And then I see a rolling forward sort of 12, 24, 36 months. I'm optimistic that there will be a return to pre 2020 levels. And when you look at sort of how long does it take, I think will be the question.
Yeah, and I know M&A is your focus, but presumably there'll be startups, there'll be people seeing the gaps, won't they, and the opportunities. And like you say, the industry is going to need to do something after this. It's going to need to transform. It's going to have to do some things differently. So
I think the beauty of the travel industry is it's so dynamic, and technology plays such a big part, and is equally so transparent. Is that it's customer facing, and so you can see what your competitors are doing. You might not know how they're doing it, but you can see what they're doing. And so I think change begets change, and I think we will see that continue. And so, and I think in terms of myself, I think I'm very lucky to be part of a much bigger organisation that is strategically diverse. So we have lots of other things that we can do, whether it be valuation. We have a team that does cyber risk management. I mean, they are the busiest they've ever been. If you're an NED sitting on a travel business and you're worried about customer data, you should be speaking to a cyber team. Because if that goes wrong, I mean, there are a number of companies in the space that have had small leaks, and look at what's happened to customer confidence, to share price. It's
those cyber breaches, have they been more? I mean, are they more prevalent in times of a crisis, just because there's just so much use of customer data? Is that?
I think, I mean, not going into detail, but what we see is the level of criminal activity go up, and we see the defences of corporates tested, and we also see, when it comes to customers. I mean, this is equally so that they, sometimes if something is too good to be true, and when you're down, maybe it might be true, and so you become more vulnerable there. But I think that now is the right time, when operationally, or certainly in the last few months where operation might not have been as busy as you were, you'll be going, right, well, technologically, are we as sound as we need to be? And that's really important. We have restructuring teams, so yes, we are helping. And restructuring, unfortunately, is a bit of a dirty word in corporate finance, because they think of the caretaker or the undertaker, actually, who comes to put your business under. Actually, what they spend most of their time doing is trying to save it, and restructure the debt or the equity. So we'll spend quite a lot of time with that. For our private equity clients, we're in a whole new world of valuation. So what on earth is a business valued now versus what it was 6 months ago?
Yeah.
So yeah, I mean, it's all interesting. It's challenging. It's different. We're all adopting to working at home, but I think that will move slowly as we go back to the office and people travel more.
Yeah. And finally, Henry, I just wanted to ask you, because I did a webcast this morning actually with people saying that because there's quite a lot of confusion now around travel generally, with consumers not knowing where's safe and what's going to happen and the whole new experience that it will be, that actually that might play into the hands more of traditional travel companies that are much more higher touch with the consumer, whether it's a travel agent or a tour operator. So that greater sort of service level. And I know previously, perhaps private equity have been very interested in the sort of very high tech companies, and we've seen a lot of growth, haven't we, in OTAs, etc. So I just wondered whether a crisis of this magnitude might actually sort of flip the focus of what, you know, acquirers will be interested in, given that customer demand for more reassurance and safety and security is going to be heightened.
Yeah, and I'm not gonna. I don't want to make generalizations, but what I will say is that it does depend a lot on the customer. You know, I think what we see is some of the younger customers, they're happy to book and have been happy to book a £3,000 trip without talking to anyone. Equally, private equity have invested in a number of high quality, high touch businesses. You know, you only have to look at, if you look at group travel, the Rivieras and the Great Rail Journeys, they are both invested and have been by private equity. They are both high touch businesses with a customer base that sometimes needs reassurance on the phone and sometimes doesn't. So I think maybe, but I think what we'll see more is technology continuing to improve, which it does, and therefore enabling travel businesses to continue their journey to be tech-enabled travel businesses.
Okay. All right. Well, fascinating, and I'm really interested to find out, you know, to follow what you're up to, and hopefully we will see some movement and some activity in the sector. And certainly, if it's in the case of some companies that are in distress, we'll hope that somebody will swoop in and save them, because we obviously want to keep as many of these fantastic brands in travel alive. Yeah, so thank you for your time, Henry. We really appreciate it. So Henry from Duff Phelps, thank you.
Thank you for your time as well.
Thank you.